Yeah, hi guys. Yep, Jason here from Mexico. And yep, on personal preference, this video is being done. Yep, before that, I'll just read you the disclaimer. Trading futures, commodities, and forex market is one of the riskiest form of investment available in the financial markets and suitable for sophisticated individuals and institutions. The possibility exists that you could sustain a substantial loss of funds, and therefore you should not invest money that you cannot afford to lose. Meaning it's a win-lose thing if you go sideline or all in. How often can you win market? It's about consistency. It's not about getting rich. So always remember that. All right, let's continue. All right, this particular setups or not really setups analysis is actually requested by my students, mentioning saying that I kind of like missed out goal analysis on my previous video. So I'll just fit this video back into it and I'll just keep it aside. Yeah, I mean, it's just to share a little bit of what I do, why I like to do videos, not so much to build crowd or anything on YouTube. It's actually to remind myself as a trading plan. See, if we were to start writing or drafting, the problem with us is we are human being at the end of the day. If we don't keep a record of how we analyze the market and kind of like tend to forget about it if we just draft lines here and there and write something and our plan might change at the end of the day. So I would love to use videos and record it down. So just in case personally I forget about what's my plan because there's like so many bloody pairs that I'm monitoring. Um, the best way is record it up, just look to it. I mean, this is on Monday. So Monday record the video, Tuesday record a video. It's part of a plan. Just go through it. It's simple, it's easy, it's nothing to lose. And anyway, let's start away. That's why I do videos. To keep a plan, to stick to my plan, what I want to do. If the plan works, I make some good profits. If the plan failed, then I'll just reanalyze the market and plan it out again. That's how it works. Not every time that what we want the market to do or we expect the market to do, it will happen. Just think about that. All right. This is gold. Actually, you versus paired with dollar. So it's two particular thing. Gold, as usual, it's a inflation hedge thing. It's an inflation hedge instrument. The reason why it's an inflation hedge instrument is because if there's if inflation, the idea of inflation is to devalue, it will devalue a currency itself. So if the investor or the big investors or small investor or anybody when invest decided saying that or saw potentially that inflation might happen, and if they were to still keep it in the form of currency, and in long run it will be devalued because inflation hike, currency drop. That's the way it works. So most probably a lot of hedge funds out there will start moving their part of their percentage with 30, 40, depending what their plan is, towards gold. So what I found out that recently, or the what we call it, the current sentiment that might lead towards a certain feeling in the market, it's the first thing I did mention in my previous video. Saturday itself, COVID-8 fund 1.9 trillion. House did approve it. I mean, US House Senate. So it's a part of yay or nay type of voting. So you got to go through two stages. So House approve it, awaiting for Senate votes. So more or less like mentioning or saying that, hey, I'm 50% done. Last week or last 2 weeks, Yellen did mention saying that she will push this through or bulldoze this through for this aid. And that's one of it. So there's a potential that inflation might kick in. The reason why inflation might kick in is because every time a stimulus or a funds or a stimulus, this is a form of stimulus being poured back into the market, things will get expensive, too much money. So currency, there's a chance might get devalued, and there's a chance that inflation might climb, and that will affect gold to goes up as is inflation hedge tools or instrument, and dollar might get slaughtered. So just nice lah. I mean, I'm expecting or bias there'll be a direction or a midterm direction, long-term direction that the price might goes up like that. But there's no indication, there's no evidence. Let's find some evidence, let's find some indications or anything there that we can actually buy the market up. Even though the pressure of the current situation or the current market is actually diving. If we have a look later, I'll show you the technical side of it. So just right there, what happened previously, the dive. We gotta understand why the price goes down first before we can understand what might happen in the future or near future or next. So what happened is the dive is actually driven by the bond yield. The bond yield keep on rising. So that sparks a lot of fear into the market, and the market decided to move everything away from equities, away from commodities, away from a lot of things, and practically keep it in the form of dollar. Especially when you're talking about dollars here. So it will keep in the form of dollar, and that's where dollar have the driver went up like crazy heavily that way. So this is part of the analysis previously that I did, the previous video. If you guys want to kind of like have a look at the previous video, just go through it. It's really, I hope that it helps. And moreover, this is not a financial advice telling you whether to buy or sell. This is just for educational purposes anyway. All right, my plan anyway. Okay, let's move ahead. Since I have evidence saying that fundamentally side COVID-8 fund came out 50% done, the other 50% still awaiting. So it's 50-50 already, rather than just sitting there doing nothing all this while, not too sure what's going to happen. Bond yield itself start to show weakness, say, start to show weakness here, start to climb back, I mean, start to drop back a bit by a bit by a bit. And then inflation might kick in, who might know. It's just a guess, it's just a fundamentally it's supposed to work that way. Whether it work or it doesn't work, not really important, but at least I get a biased direction from the evidence that I can gather. That's the whole idea. As long as I gathered some evidence from the fundamental side, I will get a fundamental biased direction. That's one of it. So once I have a direction fundamentally, I only go down to the technical side to find evidence where I might able to buy the market up. So let's get back to here. This dive is because of this, and I'm awaiting for this to happen. Let's delete this off. This done, this over. Whether the price still want to continue to go down, I really don't know. Whether the price will actually want to goes back up and have an upside, heavy upside, I can't really tell either. I only can rely on this. And yep, let's find some technical entries or areas or area of interest that we can wait. So I just put this here first. Kakak bit. All right. First thing that I know is price. Let's pull this up. Broken. Very interesting zones or a key area. Consider a key area. Yep, it's a key. Yep, it's a key area. It's a support lah. Key support. I was call it a key support. So price have broken a key support and decided to kind of like drop another 400 pips. I think yep, 400 pips. Whoever have sold here, congratulations, make a good pips based on this. This is really nice. Took some trades there anyway, and gave me quite a good profit based on that. So since I'm biased upside now, not so much on the downside, small little evidence that the market came back but not strong enough. And where is the next support? Let's have a look. Here you go. All right, key area wise, how do we find key area? Up, down, up. All right, so that's one here and that's one here. So what I can do is I'll just map it out here, price broken, and map it out on the lower side. So this is two part of my key area. So let's go back all the way to the front. Okay, what I can see now is price still kind of jam inside there. So how to take trades, how to do, how to wait, not wait, how do we take trades here? How do we see setups? How do we go in as an entry? First, all I know is my first key area broken, my second key area is not broken. There's a possibility that it might comes here. So what I'll do, this one is quite simple. It's all the waiting time. I would love to see more rejection here happens first, especially on H4, for me to go in to decide whether I want to buy up or not. Even though there's a lot of rejection, let's say reject, 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 start to reject, up and down, because after pressure push this way, there'll be a lot of panic sell. See, price been moving down, like it or not, thanks to some sentiments ongoing that this particular moment on Thursday and Friday or Wednesday started it. So once it started this particular momentum or the momentum dive, and eventually it created a push of from a big money push. This is called a big money push. So this big money push, there's two possibility might happen. One, it push to wipe out SL, which banks call it SL hunt, or some people call it SL hunt. It could be an SL hunt here. It could be not an SL hunt here, or just that based on the particular last week sentiment on Friday itself that came out saying that the bond yield, everything is about bond yield, and it just boop, blow. It just dropped. Right? Once it dropped, it could be, all I know it's this particular bar represent one thing only, big money. So if big money ever comes in from this particular direction on the downside, and I would love to buy the market back up based on this fundamental itself, this particular fundamental ideology itself is just the bias, I cannot just go in like that. If we were to have a look in the past, every time after a push or a price push or a massive push or big money that comes in, for the price to goes back up again, what do we need to see? I mean, there's an example here that is just nice that we can refer to. A push, a big push, a bank push, whatever we want to call it, big money, just a big Marubozuba, it shows there's a lot of money being involved there for it to drop this way. There's been a lot of sellers here. In order for us to buy back up, we gotta have more evidence, a lot of evidence. See, came down, the next 2 days, it came down more. Could this repeat here? There is that possibility, but there's a difference between this and this. There's an immediate next 4 hours of buyer presence. Buyer kind of like came in here and say, hey, that's enough. I might come in, I'm hinting that I'm coming in, but I'm not sure whether I came in already or not. So this is that particular story that we can make up here, or that's how it telling. All right, so that's one of the story that's going on here. So what we want to do for this, or what I want to do, is I would love to wait for the next few more, perhaps a 4 or 5, at least a 3 more candlestick or 4 more candlestick of 4 hours, because I would love to see what will happen in the next 12 hours. I mean, 12 hours is quite easily wait. Unlike shares, you gotta wait like crazy for months. Some of them counters, some of the counters take days, some of the counters takes months, some of the counters takes hours. But when it comes to gold, commodities, it usually take hours for us to get some answers there. All right. I won't be doing any intraday for this pair. I won't be doing any scalping for this pair, because I would love to go in for a swing high for this pair. For that to happen, I need to gather more evidence on the chart side for the price to have some push here, rejection. The more rejection it have, the better. And if there's a price sitting starts to sit here, that I can kind of like map out my support and resistance, which telling me saying that the market might range, the market might range here and could be ranging here and here, who might knows, because there's no evidence, there's nothing yet showing anything that it might goes back up. It didn't show anything that it might come back down again, especially this is just a breakout bar from 1 hour. It doesn't mean anything. It just 1 hour telling me, hey, I broke. That's all. 1 hour have no power. That's the only thing that I can tell you. If it's 4 hour that did that, it's rather more powerful. So in terms of ranging, can't really tell. There's not much of a range. There's not much of a price sitting. All I know it's price 1 hour is sit here, but it only sit for 1, 2, 3, 4, 4 hours. 4 hours compare with what might happen for the next few 4 hours candlestick. It'll be like what, 12 hours, 16 hours. That'll be even greater. So with that pressure, not really pressure, with that formation, we just wait out a little bit longer for to see what might happen, what will form, and then only we decide whether we want to buy back up again or not. A few structure that I always rely on, or personally my preference, it's if there's a very nice long tail bar or a very nice pin bar and the price push back up as a momentum, I would actually take a trade based on 4H itself. If 4H doesn't come with that, or it doesn't form that way, and it start to stay range around here, maybe it start to range slowly to the bottom side, could be happening that because it's been proven that, not really proven, most of the time after a drop, there'll be a continuation of a small little drop and it touches my key and the other key support, it might just boom. So what I truly wanted to see is price to perhaps just a prediction, goes down, goes up, goes down, goes yeah, maybe it goes down, goes up, goes down, goes up, goes down, goes up. But I won't be selling these particular setups. What I'm waiting for is one particular push all the way up here, a very heavy push, and close around here, and the next push it could be coming down here and break it again. This is what I would love to see. Then with here, I'll be able to map out my zones, my key area, see what it form. This is just a prediction of might happen, because the other prediction it's like, well, boom, immediately goes up, also will happen. So it very much depending what might happen, what form further. So for gold now, it's just sit aside, eat some popcorn, monitor what might happen next, and just monitor this pair. Not really a time to enter yet, I would say. To sell, kind of like go against my evidence that I gather fundamentally. To buy, technical wise, nothing happened yet. There's still a bank push, there's still a pushing bar, there's still a pressure bar, there's still a momentum bar that actually push the market down. So for this, just sit aside, monitor further, open some popcorns, potato chips, just look at it. 4 hour, every 4 hour you come back and have a look at it. Because 4 hour have more pressure. That's the only thing I can tell you. Or it could be, let's say, wait out for the whole Monday itself. Let it runs for another 24 hours to know an answer, to see what form. See, that's why we don't trade every day if you want to swing. If you want to intraday, go ahead, find another pair that is more likable or have more evidence that it gather it, that it might range, it might break out. So those you can do intraday. But if we insist saying that you want to intra gold, or I only play gold, I only trade gold, that's kind of like crazy, because not supposed to do anything now, but to see further evidence of what might happen. We got to gather more evidence. That's what I would say. So this is for gold, and yep, thank you very much for listening to me. This is my 2 cents. This is my analysis, and I hope that it helps you guys as well. It's a very simple analysis based on naked chart, no indicator. If you guys want to plug in some indicator, go ahead. No, I'm done. Every strategy that I know in the market actually makes money. Just that, do we know how to use it only? Do we know the money management behind it? That's the only difference. All right. Thank you very much. And yeah, those that haven't subscribed to me, perhaps you would love to subscribe. Click the red little button and kind of like turn it into gray. Put notification on, like this video. Love for that. All right. Thank you very much and have a great day. Bye. See you on the next video.